All right. Today is Tuesday, May 17th, and this is a recap for the stock market activities today. Folks, I got a good one for you tonight. And I know it's early in the morning in Britain. You might have just woken up with a nice cup of coffee, maybe a cup of tea, and the first thing you see on the screen is the British economy is collapsing. What's going on here? Well, I cannot sugarcoat it for you, so grab yourself another cup of whatever you're drinking, or better yet, splash a little adult beverage on whatever you're drinking right now because you're gonna need it. But hey, on the bright side, whatever you're facing right now is a lot better than this guy. This 24-year-old who quit his job at the hedge fund powerhouse Citadel, and he decided to become a full-time ape to build on Terra. You know, the tulip that we call Terra? Well, guess what? It collapsed 2 months later. Down 99.9%, poof, gone. And now the guy has no income. And to add more pain to the misery, he started an OnlyFans account. Nobody subscribed, and people called him ugly. So yes, it can get a lot worse than whatever you're facing right now. So cheer up. Let's move on. Here it is. In focus tonight. Apocalyptic. Yep, not my words. These are the words of the Bank of England Governor, Ed Bailey, who issued a dire apocalyptic warning over rising food prices. What is he talking about? Here is Mr. Bailey in his own words.
And then, I'm afraid the one that I am going to sound, I guess, rather apocalyptic about is food. So when I was in Washington at the IMF World Bank spring meetings a month or so ago, and we had the Ukrainian finance minister there. I did spend most of my time in meetings. People think I spent most of my time walking out of meetings. I didn't actually, but only when the Russian finance minister came on. But I have to tell you that I think this is a big concern, because I think two things that the Ukrainian finance minister said. One is Ukraine does have food in store, but it can't get it out at the moment. Two, while he was optimistic about crop planting, as you know, Ukraine is a major supplier of wheat, major supplier of oil, of cooking oils. And he said, he was pretty optimistic about planting, interestingly, but he said at the moment, we have no way of shipping it out. As things stand at the moment, it's getting worse. And that is a major worry, and it's not just, I have to tell you, a major worry for this country, it is a major worry for the developing world as well. And so if I had to sorry for being apocalyptic for a moment.
And of course, the consensus for now is we're going to have a massive global food shortages. And this will impact poorer countries the most. We're going to see a massive famine, a starvation crisis. But Western countries are not going to be spared from the pain. This is exactly what's going to happen in England and many other countries. To begin with, when we look at the UN World Food Price Index, it is at all-time highs. Food has never been more expensive than today. But of course, rest assured, your government, your beloved leader, Johnson, well, he came out and said, whatever Bailey said, that he's just exaggerating, apocalyptic. He watched too many horror movies as of late. Nothing to see here. Please disperse. But here's the reality. We'll look at these generic items at the grocery store or the supermarket. Chicken up 22.6%, baked beans up 21.3%, penne pasta up 47.8%. Unbelievable. And it goes on and on and on. Even though the British population spends a lot less on food than their European counterparts. And it is becoming evident, by the way, the struggles of the average British household at the supermarket. Because we're seeing sales at discount stores moving higher, while sales at regular supermarkets are dropping down. This is yet another indicator that the average British household is facing a massive cost of living crisis. Now, the Bank of England, the suggestion that they have for us is, yes, we have an apocalyptic food price rises across the globe, but even in Britain. And the solution is, workers need to stop being greedy. Please reflect before asking for higher wages. You are the problem, not our failures, the Bank of England, by being way behind the curve and too late to tame inflation. When Mr. Bailey talks about greedy workers asking for higher wages, what the hell are you talking about? Maybe you want to start by cutting your own insane wage, Mr. Bailey? Because the majority of wage inflation in Britain is led by finance and real estate. Yep, bankers, professionals, managers. That's where the majority of wage inflation is coming from, not from baristas, hospitality, transport, and retail workers. You want to talk about being out of touch? Here it is. And of course, when he talks about wages going higher and stop being greedy, when you ask for higher wages, you're causing more inflation, yada, yada, yada. Well, look at this. Unemployment is down all in all in the UK, but wages are dropping like a rock. They're falling sharply in a manner that we have never seen before. Inflation is projected to cost the average UK household over £2,400 this year. And the living standards in the UK are dropping in the fastest pace in almost 9 years. This is the worst living standard that Britons are going through since 2013. And the Bank of England is projecting that yes, the living standard and the disposable income for the average British household will go down this year, but then it's going to recover in 2023, 2024. So the drop in the disposable income and the standard of living is transitory. And here, let me fix this one for you. Here it is. Yep. A lot better and perhaps more realistic. Consumer prices are surging out of whack in Britain, and this is causing consumers to slow down spending. The consumer is changing their spending behavior because they have to chase inflation. They have to pay more for petrol, more for rent, more for utility bills, more at the supermarket, and they have to cut spending otherwise, and therefore this economy is already in a massive stagflation crisis. And economists project that the UK economy is only going to get worse as growth slowdown begins. This is stagflation. The next step is a recession. And if the geniuses, the politicians, and the central bankers don't handle the crisis as they're supposed to, the recession could morph into a depression. Of course, the sterling has been dropping like a rock, and this is not going to help at all. But the question is, why is the inflation and the cost of living crisis is more evident in Britain versus other European countries, for example? Well, it is happening in countries like Germany, France, Italy. But yes, it is getting dire in the United Kingdom because it's not just wage inflation or commodities prices that is pushing inflation higher and thus reducing the standard of living. It is also an energy problem, not just for Britain, by the way, but for the entirety of the European continent right now. Is it because of Russia? The answer is yes and no. Yes, because the United Kingdom is a net importer of Russian goods, as you can see from the chart. But no, because the majority of natural gas and oil that is imported in the UK actually comes from Norway, Qatar, US, France, and other countries. Russia represents a slim share of the imports. Now, as you can see here, Norway is the #1 exporter of oil and gas to the United Kingdom. Russia is there, but it's not a significant portion. So why are we seeing energy prices moving significantly higher in the United Kingdom? It doesn't matter where you get the oil and gas from, whether you get it from Russia, from Norway, from Qatar, it doesn't matter. You're going to pay the market price. And the market price for oil and gas is surging by the day because when you have a disruption of supply in one corner of the demand in the global economy, well, if there is no substitute for that, you're going to see prices moving higher for all consumers, whether they have the oil and gas domestically or not. A lot of countries in the globe depend on Russian oil and gas. Well, if they cannot import Russian and oil gas anymore, they have to compete on whatever left, whether that comes from Norway, Qatar, Egypt, US, doesn't matter, and therefore they push the prices higher. And the end result is UK consumers have to pay more for oil and gas. But here's where Russia comes into play. When we talk about diesel, 1/3 of diesel imports in the United Kingdom comes from Russia, and therefore we're seeing prices surging to astonishing levels. And remember, diesel is used more in European countries than it is used here in the US for regular cars. Here in the US, we use diesel for trucks and larger vehicles. In the UK, they use a lot of diesel for regular cars. So here it is. The cost for Britain's motorists to fill up their cars with diesel reached a fresh high, with the price rising to a record 180.29 pence per litre. And if you're paying more for petrol and diesel, you're paying more for electricity and heat. And those bills are becoming overwhelming for the majority of households, to the point where we're seeing families seeking refuge in McDonald's. Yep, I mean, is this a third world country or what? Here in the US, we have a shortage of baby formula. We have hungry babies in this country. And in the United Kingdom, they have families seeking refuge in McDonald's to use cooling, heating, kitchens because they cannot afford the cost at home. This is a massive failure of leadership by your beloved senile politicians. They have failed in every aspect, but it gets even worse. The UK energy chief fears that 40% of Britons could fall into fuel poverty in a truly horrific winter. Now, here's a thought that I have. I think that Putin is playing another game here. Now that he realizes this war is going to be prolonged, it's not going to happen fast as he projected before. So I believe his game right now is stay calm, stay cool, keep pumping gas and oil in rubles, keep accumulating wealth for now, and when the winter season arrives, he's going to cut gas supplies to the European Union and Britain and let them freeze. That could be a card that Putin is playing right now. And when the population is freezing, you got no other choice but to bow down. So again, the question is, do our leaders in the West even understand what they're doing right now? Do they even have a plan or not? And the answer is not really. But back to Britain, remember, the country had a deadline in April with a cap for energy bills was supposed to be lifted, but the projection at the time was we will see at least 50% of British households falling into poverty if the cap is lifted. So the cap is now extended. And they will continue to extend those caps over and over and over again because there is no other choice. And as a result, you're going to see these energy companies falling apart. Are they going to be nationalized by the British government, for example? This is a colossal failure. So the solution for now for the Bank of England is to crush the demand as much as they can, and this will be devastating for the British economy. It's already under stagflation. More tightening of the monetary policy will mean more pain for the British economy. It will guarantee a recession, if not a depression. But this is the only choice available for now. They cannot control the supply. It's too late for that now. And they've been easing for a long time. The demand is sky high, pushing inflation higher and higher and higher. And therefore, they have to crush the demand. Well, by doing so, they're going to cause a lot of unemployment. And the BOE projects that unemployment will go to 5%, and then it's going to cool down from that point on. No biggie here, nothing to see. It's just a little spike in unemployment and then we move on. And here, let me fix this one for you. Here it is. Yep, more like 10 to 15%. And folks, this is the reality of what's going on in the British economy and the suffering of seniors on fixed income in that particular economy. Take a look.
Nobody wants to queue for a food bank at any stage of their lives. But imagine, like Brenda, having to do it at the age of 78 with the ability to earn long gone. Or 68-year-old Michael, who's worked all his life on the London Underground and says he has £25 a week in spare cash.
Can you imagine that life would be like this?
No, not at all. I thought I was going to live comfortably. What I have to do is boil water every time I want to shave or have a proper wash.
The food bank can trigger a range of emotions.
Are you struggling?
Too much.
1 in 5 pensioners are in poverty. And after 2 years and counting of a pandemic which picks off the most frail amongst the elderly, the cost of living adds to their loneliness and anxiety.
I think it goes back to their experiences often of being brought up in wartime and the experience of there not being enough to go around and having to make do.
Time and again, people are turning to their communities. These are volunteers brought together by unprecedented need in extraordinary times.
Thank you.
Their first call is to a 92-year-old man who hasn't been out since last October. Richard needs the lights on all day because his flat is so dark. His oxygen machine runs constantly. It's all racking up energy costs.
Hello, my friend. How you keeping?
The volunteers have brought him food and company.
We're isolated now from the rest of the community within our own building.
Oh, brilliant. Oh, thank you.
Next, there's a book to deliver to Doreen.
Oh, that's a keepsake.
At 74, she can't afford to put the central heating on. Instead, there's 1 bar of the electric fire on in 1 room.
The other night, I went to bed and I felt lovely. And then about 2 o'clock in the morning, I thought, the heating. I've left the heating on, so I've had to come all the way down on the stair lift to turn the heating off, and then you wake up freezing cold.
Do you find it all quite depressing?
Yeah, it is. It is. And it's getting even worse now.
But rest assured, your government is coming to the rescue. Here it is. The UK to provide £1.3 billion of further inflation support to Britons. Oh, I'm sorry, that's the wrong headline. Here it is. UK to provide £1.3 billion of further military support to Ukraine. Yep, the priority is to fund the proxy war in Ukraine. Therefore, they're not even trying to orchestrate a peace deal because they're all in. If we pour more money, more weapons, the Ukrainians are going to win and Russia's going to collapse. And we don't know what's going to happen after that. They don't even have a plan for what's going to happen after that. But if you thought your government is irresponsible in Britain, rest assured our government here in the United States is not just irresponsible, it's absolutely treasonous to the American people. Take a look.
I think we all agree the most important thing going on in the world right now is the war in Ukraine. I had a chance to call the president last week and request that the Ukraine package move by itself and quickly. He said, let me think it over. He called back in about 15 minutes and agreed that we need to do this Ukraine only and quickly.
Because a coward is leading the fight and brutalizing his own people, turning them into animals in the way they are treating other people. So again, we think the size of the package is significant because it will enable the Ukrainians to more efficiently and quickly to deal with the challenge that they face.
It's going to allow pensions and social support to be paid to the Ukrainian people so they have something in their pocket. And I hope Congress will move on this funding quickly. I believe they will.
But if Putin loses, then I think that's a great day for Europe, a great day for the United States. We need to triple down on our willingness to help the Ukraine. We need to pass a $33 billion supplemental package, $20 billion for weapons. We need to work with the International Criminal Court to gather evidence to prosecute Putin personally. We need a resolution that I have with Senator Blumenthal, a Democrat, to designate Russia as a state sponsor of terrorism. We need to put more weapons in theater that can strike the Russian military offensively. So I want to triple down on beating Putin.
Again, they're all in with such urgency to fund the proxy war in Ukraine, to do the money laundering to the military-industrial complex and the defense contractors, but nothing to the suffering folks here in this country with the shortages of baby formula. And in Britain, you have seniors pretty much on the brink of going hungry or even dying prematurely. Our politicians have failed us tremendously. And how is the sanctions and the war against Russia going on? By the way, here it is. The Russian ruble nears 5-year highs versus the euro, and Russian stocks are up, they're recovering. Matter of fact, the Russian central bank reported a surplus of almost $100 billion for the first quarter of this year. So how is sticking at the Putin bra going on? What a colossal stupidity and incompetence. Anyhow, folks, we're going to move on here. I know a lot of you messaged me about Warren Buffett and the 13 Fs that came out and the crash in Walmart stock, gasoline prices reaching all-time highs here in the U.S. Rest assured, I'm going to cover all of that tomorrow. Not today. For now, I'm going to move on and cover the stock market for you. We start with the performance of indices today. And here we go. It was rebound day 2. On decent volume, by the way. The Dow Industrial Average closing in the green by 431.17 points, or a gain of 1.34%. The Nasdaq also in the green by 321.73 points, or a gain of 2.76%. And the S&P 500, surprise, surprise, in the green by 80.84 points, or a gain of almost 2%. The sector's performances today led by cyclicals at number 1 and capturing the gold medal, at number 2 for the silver, materials, number 3 for the bronze, technology. The only laggard of the day is defensives, and the reason is Walmart. Walmart was down big and impacted Target and Kroger and other names in defensives, but it is really Walmart. We will talk about the crash in Walmart tomorrow. The advance to decline ratios, NYSE 86% advancing versus 11% declining. The Nasdaq 79% advancing versus 17% declining. Commodities, we're seeing a pullback for crude, both the WTI and Brent. Brent down big, almost 2.5%. WTI down almost 2%, but so is gasoline. That's a relief, down almost 2.5%. And heating oil down by almost 3%. On the other hand, the run in natural gas, no stop inside here, up almost 4.5%. When we talk about softs, look at that. Coffee continues to move higher, and coffee and sugar, they come hand in hand. So sugar acting sweet and closing with gains of almost 1.5%, exactly at $20. And then we have modest gains for lumber and cocoa. OJ was pretty much in the flat line, while cotton was the loser of the day in softs, down almost 1.25%. When we talk about metals, green across the board for platinum, copper, palladium, but gold and silver still struggling to move higher. Gold made it higher in the morning, but then came Powell in the Wall Street Journal with the hawkish commentary, and that pushed the 10-year yield higher again, and therefore precious metals struggling here. But the good news is the dollar is down, at least for today, and the euro and the British pound moved higher. Therefore, we're seeing a rebound in platinum, copper, and palladium, specifically copper. Now, we're hearing some rumors that perhaps Shanghai will open up. This is the third day with zero, the thing result, and therefore maybe Shanghai will open up. We'll see. But if it does, you're going to see a massive rebound in metals led by copper and aluminum. Moving on to meats, we have pretty much muted action for live and feeder cattle futures. On the other hand, the new big tech lean hogs gaining another 1% or so today. When we talk about grains, the losses were led by rough rice, down over 5% today. It got to the 18 target of the trade that I had, and then it flushed down big time by almost 5%. And then we have modest losses for corn, almost 1%, and soybean meal, almost a half a percentage point to the downside. Likewise, canola, similar story. Yet we have modest gains for soybean oil and notable gains for both wheat. The rally in wheat is not going to stop anytime soon. A historic biblical shortage of wheat, and therefore wheat closing the day with gains of almost 2.5%. Similar story for oats, and then we have soybeans closing the day with gains of a little over 1.25%. Now, when we talk about why was oil down, perhaps this explains it. The U.S. eased a few economic sanctions against Venezuela. I guess Venezuela is now a democracy, right? Or maybe the Biden administration is so desperate for gasoline prices to go down, they're willing to compromise on their so-called morals. You know, because one dictator is better than the other. The Maduro regime is better than the Putin regime, etc., etc. We pick and choose however we want, however that accommodates the deep state globalist oligarchy. But anyhow, when we talk about grains, see, Russia says the fertilizers are ready to go. We have a lot of potash ready to go. But of course, the sanctions are preventing importers from taking the risk and importing potash from Russia. And therefore, fertilizer prices continue to move higher, and grains, as a result, continue to move higher, specifically wheat, corn, not so much for soybeans because soybeans use less fertilizer than corn and wheat. Anyhow, the farming lesson is over. We're moving on to the big casino, the options market. And here it is. The volume remains dead. No action at all. And this is an alarming sign that perhaps the rebound is not going to be sustainable. And we've seen a lot of rebounds, yet the retail crowd, market participants, specifically in the options market, are not responding. They're not buying call options as they used to before. We understand that the volume is going to be down. The bubble is over. The retail crowd is holding massive bags. They lost in the stock market. They had a nice roller coaster ride for 2 years, and now game over. So we're not going to see the same volume as 2021, 2022, or 2020. But we have to see the ratios moving more favorably toward calls than this. For now, we have 50-50 almost. We got to see over 60%, over 70% calls in names like Apple, Tesla, Nvidia, etc., for the market to move higher. This is not what we're seeing, at least for now. Regardless, Apple, the big kahuna, is at number one with around 1 million contracts traded for the name today. About 55.5% of those were calls. At number two, AMD, at around 800,000 contracts, about 60% of those were calls. At number three, Tesla, the souffle, at around, let's say, 575,000 contracts traded for the name today. About 54% of those were calls. And notice Chevron, by the way. Chevron Chevron has about 96% of the contracts traded today for calls. Why are they doing that? Because tomorrow is dividend day. So if you're a Chevron shareholder, you should have sold some calls today or at least bought some puts because in all likelihood, the stock is going to go down. A lot of folks are going to capture the dividend. The stock is going to go down. That could be a buying opportunity if we see crude oil prices rebounding and moving higher again. But if crude moves down, watch out here. Give it a little time before buying the dip in Chevron. Moving on to the unusual activities that took place in the options market today. We start with the ticker NTR for Nutrin. Now we have two of them, so pay attention here. One for puts, the other one for calls. You can interpret this trade as a strangle trade, or my interpretation is we have a shareholder of Nutrin who's selling upside calls and they're buying puts. In this case, they're selling the 125 calls and they're buying the 90 puts, all for the expiration date, June 17th. And they paid around $1.50 a piece for buying the 90 puts, and they received about 50 cents a piece from selling the 125 calls. All in all, they reduced the entry price from $1.50 for buying the puts to $1 a piece. That brings the amount spent for this trade at around $1 million. And then we have the ticker LAZR, Luminar, a good company, but the stock is overvalued and went down big. Perhaps it is reaching a bottom, at least according to this trade, because they're buying the $11 calls for the expiration date, June 3rd, with expectations that the name could move higher by more than 6% by then. They paid all around 55 cents a piece to enter this trade, all in all spending around $500,000. What about the ticker DHYDR Horton? All home builders are getting whacked this year. And the reason is the rise in the 10-year yield. Now, we were under the assumption that the 10-year yield is pulling back, and then came Jerome Powell with the hawkish commentary in the Wall Street Journal. So the 10-year yield perked up higher again, yet this trader bought calls on DHY regardless of that. In specific, they bought the $80 calls for the expiration date, July 1st, with expectations that the name could move higher by more than 13.5% by then. They paid around $1.25 a piece to enter this trade, all in all spending around $1 million. What about the trade for the ticker AAPL Apple? They're buying calls, the 165 calls for the expiration date, July 1st, with expectations that Apple could move higher by more than 10.5% by then. They paid around $1.30 a piece to enter this trade, all in all spending around $1 million. And then we have the FXY. This is the Chinese ETF. Now, if Shanghai opens, we will see massive rebounds in Alibaba, JD, the NIOs of the world, the Li Autos of the world. So you might want to buy calls on those, but you got to be careful because this trader right here is actually buying puts, betting that the rebound that we got today is transitory. They bought the 28 puts for the expiration date, July 15th. With expectations, the name could move down by more than 8% by then. They paid around $1 a piece to enter this trade, all in all spending around $600,000. Lastly, the bottom of the table, what about the ticker QQQ for the NASDAQ? And this is an important one. Somebody's betting that this rebound is not going to last. They're actually fading the rep or selling the rep, whatever you want to use, doesn't matter to me, but they're buying the 288 puts for the expiration date, June 30th. With expectations that the Qs could go down by more than 6% by then. They paid around $7 a piece to enter this trade, all in all spending around $3.5 million. Now, this could be a put options trade. Somebody's betting against the rebound that we got right now, but it could also be somebody who bought the Qs today and they're hedging in case they're wrong. Anyways, we're moving on to the heat map analysis. What's going on here? A sea of green. The tide that lifted all boats? Was it Jerome Powell comments? Doubt it. Was it the technicals? Perhaps. Or was it the drop in the US dollar? I would say it's the latter. Technology up, communication services up, cyclicals up, materials up big because you got double tailwinds today. You got the regular rebound. Perhaps the dollar is going down. Whatever reason, doesn't matter. And then we have the optimism that perhaps Shanghai is opening up and therefore copper was up big. Aluminum, Alcoa, was up big. The fertilizer names, pretty much everything besides gold was working in materials today. Energy muted because crude was down, but still in the green. We're seeing gas names gaining the most. Industrials rebounding. Again, when you see names like Boeing, for example, moving higher. Caterpillar moving higher, ABB moving higher, Honeywell, General Electric moving higher. You could say yes, it's the drop in the dollar and the optimism of the rebound, but it could also be the optimism of China opening up again. Financials are moving higher. We got some news from Buffett buying Citibank and that blasted the name higher. The 10-year yield moved higher again, but again, banks have not been tracking the 10-year yield for a long while. The only loser that we got today is defensives. Defensives down due to the massive, embarrassing results that we got from Walmart today. We're going to go over that in details in tomorrow's video, but we also have an underperformer in McDonald's, in restaurants. They got out of Russia. They're getting a $1 billion plus hit, and who knows how the revenues will be impacted in the next quarter. In Big Pharma, we have a notable underperformer, which is AbbVie, the ticker ABBV. And again, Berkshire Hathaway, Warren Buffett, the big buffet, is done with AbbVie. And now I have to look back and assess whether I should dump AbbVie or not. Warren Buffett is the greatest investor of all time, but he doesn't have the greatest timing either. And therefore, I want to do Buffett in a separate video when I have the time to look at these individual names and charts and make my own determination. Here's some corporate news for you for individual names. Let's start with Meta, Facebook. Facebook parent company Meta said Tuesday that a bug, quote unquote, resulted in content getting mistakenly pulled down in the first 3 months of the year. Oh, really? A bug? Was it a mosquito or cockroach? What was it? Or is this due to this piece of news? We got the great state of Texas, baby. And now they're restoring a law that allows citizens to sue companies like Facebook, Twitter, YouTube for censorship. Uh-oh. All of a sudden, we're seeing a cleanup operation in Twitter and Facebook, hopefully YouTube at some point. The rigged CIA algorithms that pump CNN and the verified news sources and suppresses channels like this, for example. Anyhow, we have news for JP Morgan, and gangster Jamie Dimon is not getting his wishes at all. There was a vote today, and they rejected Jamie Dimon's request of $50 million plus per year salary and another tyrannic tenure of 5 years plus. No thanks. Massive pie in the face of gangster Jamie Dimon. Moving on to the heat map analysis for the ETF. This is a daily look. Again, a sea of green. Everything is working today. Whether we're talking about energy, technology, financials, consumer cyclicals, value growth, doesn't matter. International markets working. The laggard is the XLP consumer staples due to Walmart. But besides that, everything is working today. Even commodities are working. Big time, with exception of gold and silver. Of course, the rise in the 10-year today freaked out any optimism the precious metals could rebound higher. But for now, everything is green. We're going to comb through the gains in the very next few days and figure out whether these names deserve to move higher or not. For now, let's move on to charts, and we start with SPY, the S&P 500 30 minutes chart. No retest of support whatsoever. Matter of fact, opening another gap higher. So now we have a lot of gaps to look forward to. Number one, if we have a move higher, let's say tomorrow, for example, we have 408.62. That would be interesting to watch. And if that is passed, then we have resistance at 410.5. Let's say if you look at the VIX chart, for example, which we will do in a minute, but you see perhaps signs that the VIX could rebound higher again. And as a result, the SPY could go down. Well, you got a lot of cushion now. That's the good news. If you bought the dip today, for example, you got a lot of cushion and a lot of time to find out whether you're right or wrong, and abandon if you're wrong at the minimal damage possible, because you got support at 405. That's number one if the chart goes down. If that doesn't work out, you got the gap at 401. If the chart closes the gap and then rebounds higher again, so far so good. Specifically, if it recaptures 405 right away within the same day, that would be super bullish. But again, even if 401 fails, you got 398 as support. If that's broken, then you gotta say goodbye, because in all likelihood we will see lower lows, because why would you breach important supports when you have at least 3 of them and you get a nice pattern of a reverse head and shoulder. Here's the daily chart for the continuous contract for the SPY, the S&P 500. The bulls are looking at several things. Number one, the volume is moving down. That's a good sign, indicating that perhaps the selling is over. We will see more encouraging environment for the market to move higher and rebound in a sustainable way, because lower volume means less resistance on the way higher. Number two, you got the momentum indicators moving higher. The RSI, but specifically the MACD indicator, and we're seeing a tiny baby green impression on the histogram. We haven't seen that one before in the previous rebound attempt. Now we're seeing a mini baby confirmation. We need another confirmation before you say, okay, we're good to go here. But keep in mind, that doesn't mean that the SPY is going to blast higher in massive candles all the way back to all-time highs. That could mean another move higher and then consolidation for a little while. Now, the market bulls, after being bruised for a long time so far this year, they'll take consolidation any time of the day. That's better than massive sell-offs that continue to happen every single day. And here's the take, folks. A lot of you ask me, should I buy now? Should I buy later? I told you I'm not going to tell you when to buy, when to sell, but I'm paving the way for you to assess the risk and do your own decisions. For example, a lot of folks, once they saw 3,960 recaptured the support again, that was good enough for them to buy. Other folks are waiting for 4,102. Other folks are waiting for a confirmation in the MACD indicator, so on and so forth. Risk tolerance varies among traders. And by the way, that works the same way in the short side. For example, when do you cover your short? If you've been short the Qs, for example. A lot of folks, once they saw the candle, the rebound from 3,850, that was good enough to say, okay, this appears to be a beginning of a legitimate rebound, and therefore I'm covering. Other folks going to continue to hold on to their shorts until, let's say, 4,102 is recaptured as support. Again, the strategies differ, the risk tolerance differ. So all what I have to do is let you know what's going on, and you assess and make your own decisions. Here's the SPX, the cash index for the SPY. Again, the momentum indicators are bottoming. They're moving higher again. We're about to get a confirmation in the MACD. And if this rebound is sustainable, and again, you can check the sustainability via 4 conditions that I gave for you. Number 1, short covering. We're seeing that. Number 2, retail participation via buying call options. We have yet to see that. Number 3, a pullback in the U.S. 10-year yield. We kind of saw that, but not today. Number 4, a pullback and a cooling down. We're not asking for a reversal in the U.S. dollar. We're just asking for a cooling down of the action. That would be good enough for a sustainable rebound, at least for now. And if that happens, according to the Wyckoff pattern, it could take us all the way to 4,200 before we face legitimate resistance at that point. Here's the Qs 30 minutes chart. Again, we have a lot of gaps. The bottom line is the chart has been retesting 297 over and over and over again. And the chart says that's good enough. I don't need to go down to close the gap at 291.21, at least not right now. So that means the chart wants to go higher. Well, we have a gap at 307.41. That would be target number 1. If that's beaten, then we're looking at 313, misses 313, which we know by now has an incredible amount of gravity. She's possessive, up or down. If the Qs goes up, she wants it down. If the Qs goes down, she wants it higher again. So you have these numbers to look out for. Let's say the Qs goes down tomorrow, at least in the open. You got a gap at 299.24. If we go down there, the gap is closed and the chart continues to go down again, and it violates 297.5 as support, you probably want to get out. Not shorting yet, but you probably want to book profits, whatever profits you got left if you bought the Qs on the double bottom. Here's a daily chart for the continuous contract for the NASDAQ. Again, look at the MACD indicator. In the last attempt for a rebound, we had a miss. It did not cross. Now we have a hit. We're waiting for a confirmation to say, okay, this is for real. What is for real means? It means the chart goes higher all the way in a retest of the trend line in yellow, which happens to be at around 13,300, let's call it that. These are nice profits to be made. So if you want to play this rebound, you can buy names like Adobe, for example, which is oversold for now. That could be a nice rebound. If you're looking for more confirmations, if you're more disciplined, you'd wait for another move higher. You see another green impression in the histogram of the MACD. You see, for example, 12,766 being recaptured as support again, and then you buy. Other folks, the risk tolerance says we're going to buy immediately after 12,207 is recaptured. So again, for now, we have encouraging signs that this could be a legitimate rebound, at least for a little while, according to the momentum indicators, according to the volume, which is down today again, and according to other indicators that I'm going to share with you in tomorrow's video. Is it in the bag that the rebound is going to happen for sure? Not really. There are signs. For example, if the Qs pulls down and it loses 297.5 support, you got a problem. But if this chart that you're looking at right now climbs above 12,766, you can be conservative and call it 13,000, then we're good to go. We have a relief rally coming. And here it is, the IWM 30 minutes chart. Again, we have lots of gaps. But if you believe that the IWM, the Russell 2000, is a leading indicator, then we got good signs for the bulls here. Because while the SPY and the Qs have yet to close the gap from last week, the gap that got us down, the Russell 2000, the IWM, did close the gap at 181. In doing so, it opened the gap below at 177.14. So you got a lot of cushion here if you bought the dip. You got 181. That has been already retested, by the way, as I'm pointing out for the candle that we got today. But if that fails again, you got 177.14. If that fails, then you got the support at 174.22. If the chart loses that, you probably don't want to hold anymore, because that's a bad sign. Yes, we got another support at 172.80, the gap, but you don't want to wait till you get there. If you start losing support lines quickly, then in all likelihood, the rebound is over. But again, I say it's a good sign for the bulls, because if the IWM is a leading indicator, then it already closed the gap above. That means the Qs and the SPY are next. Here's the daily chart for the Dixie, the dollar index. Again, we have a big pullback, a decent one. That's encouraging, but we've seen these pullbacks before, only for Tricky Dixie to rebound higher again. I mean, after the FOMC, Jerome Powell, it was a good one. It was a massive red candle down, and the chart lost support at 103. So far, so good. What do you know? The next day, we get served pies in the face, and the dollar moves higher again. And the rebound, the Jerome Powell rebound, is over. So the confirmation for now would be losing 103 once again. The encouraging sign this time around versus the last time around is look at the MACD indicator. Yes, after the conference by Powell, we got a massive down candle in the Dixie, but the MACD did not give us confirmation by producing a red impression on the histogram. We did not see a crossing. This time around, we have a crossing. We got two impressions, red impressions on the histogram, so we have confirmation. Now we're waiting for the support line confirmation. That will happen once the Dixie loses 103 as support. And I said this last month, by the way. I said the dollar needs to cool down for commodities and stocks to sustain any rally. The dollar is simply too high. And again, earlier this month, the 5th of May, I said I do not believe that the sell-off today, this is the pie in the face after Powell, was due to digesting the Fed's decision. The Fed made it clear they will continue to be behind the curve by being reactive, not proactive. I believe what we saw today is a result of a surging U.S. dollar and margin calls being triggered. And of course, we know that day the BOE came out and said that inflation will reach 10% in the UK by year end, and therefore the pound took a hammering and that pushed the dollar higher. Today we're seeing the inverse picture. The pound goes higher, the dollar goes down. If this holds, it could be good for stocks and good for commodities. Here is gold. Gold went all the way to the resistance and could not make it. To make it clear, I'm removing the trend line in yellow, and here it is, the Fibonacci resistance. It got pretty much to the penny, to that level. Is it a rejection for now? No, it's not. Gold gave it a knock. That did not work. It could give it another knock, more knocks to come. But you'll know that this is a rejection if the chart violates the last low, and that is around 1,787. Here's UK oil, Brent, and again, the reason why I did not buy futures contracts in crude is because I'm waiting for 114, 115 and other charts. This has been a massive, strong resistance, not once but twice. So we have to see whether the 114, 115 test is met with success or not before buying. If it climbs above 114, let's say 115 to be conservative once again, then we have the permission, the green light to buy crude oil contracts, in this case Brent. Why do I say that? Because if we zoom out to a daily chart for crude, you got a sloping line of resistance / support. You can see the reactions over and over and over again. And then we have the last one, a retest for support, which is successful for now. So that's good. And we have a curve, a saucer bottoming. It appears so. So the formation from a daily chart perspective is bullish for now. We're waiting for 114, 115 to be broken above once again. That'd be the confirmation that crude will move higher, perhaps to 120. If not 140 once again. Here's the daily chart for the 10-year yield. Again, we have a pop higher. On the other hand, the momentum indicators remain in negative divergences. We talked about a head and shoulder pattern last night. Is that out of the picture right now? Not really. But another move higher overnight will kill the head and shoulder pattern. Is the bear flag pattern still here? Yes, it is. But again, another massive pop higher, the bear flag goes out of the window. You put 2 and 2 together, you come up with the conclusion that the pullback in the 10-year yield is over if we have another pop higher tomorrow. Here's the TLT, a daily chart. Again, is the bull flag pattern over? It's not for now. But another move down and it's over because it has gotten a lot weaker by today's activities. Here's the VIX 4 hours chart. Again, it moves moved down, but is it reaching a bottom for now? You look at the momentum indicators, they're getting kind of overdone here. We're seeing the red impressions in the histogram of the MACD, for example, getting shorter. Is this a sign that we could see a pop in the VIX tomorrow, and that means a pullback in the SPY? If that is the case, look back at the support lines. If they fail to hold, then you know what to do. Here's a 4-hour chart for the VXN, the VIX for the Nasdaq. Unlike the regular VIX, we're seeing more weakness here. We're seeing the negative divergences in the hour side of the MACD having more way to go. We're not even at the lows of, let's say, 33 to make that assessment that there is a rebound in the VXN. So believe it or not, the Q is actually looking a little better than the SPY, at least today. Not just in the charts, but also in the volatility charts. The VXN is looking a lot better than the VIX from a Nasdaq bull perspective. Here's a daily chart for Apple. It moved higher today, and it got to the resistance of 150 pretty much to the penny, and then it retreated for a little bit. Is it over? No, it's not. Not necessarily. Look at the momentum indicators, for example, both the RSI, the MACD, they're curling their way higher, attempting to reverse the negative divergences. That's number one. Number two, the volume is down. So who's to say that Apple is not going to continue to move higher all the way to retest the next resistance, which is the trend line in yellow, and then 157 if that's beaten. Here's Tesla, an hourly chart. Tesla was up big today, but again, it maintains the bear flag look. Does that mean that Tesla has to go down? Not really. But the most important support line the bulls have to hold on to is 700. Why? When we move on to a daily chart, and explain to you why in yesterday's video, but when we move on to a daily chart, you can see the curve pattern. You have a downward curve that bottoms at some point, and then we see massive pops higher. Are we at this point right now? We have a massive curve that took us from above 1,000 all the way down to 700. You could say that we're seeing oversold conditions in Tesla, which could produce a massive pop higher, let's say to 900-ish. There is a gap there. I believe the gap is at around 865.5. That could be the target right there, and the oversold conditions would be corrected by then, and then we see a pullback. So again, you have a contrast. The hourly chart shows still weakness for now. The daily chart is saying, yes, it is weak, but perhaps too weak, to the point where the chart is perhaps bottoming for now. What about tulips, BTC? The bulls are looking at selling climax. Is the selling done for now? The good news is 30,000 is intact to support. The MACD indicator is firming up, about to produce a green impression in the histogram, indicating that the bearish momentum is perhaps done, and we're now moving to a bullish momentum. If that is the case, then this chart is moving higher all the way to 35,750. But here's the bears' perspective. The bears would argue that this is a bear flag formation. If the buyers are not going to show up, we're seeing a lot of hesitancy, a lack of conviction in buying. If nobody's going to buy Bitcoin right now, then more sellers will show up. If they do, 30,000 will be lost. If it does, we're going down big. Let's say 20,000. That is a third of Bitcoin's value. If it happens, it's not going to happen in one shot, but let's not get ahead of ourselves here and take it one day at a time. For now, the bears are looking for a confirmation that the buyers are not showing up. This will play the bear flag. The bulls are looking for a confirmation in the MACD, another pop higher, indicating that the buyers are indeed showing up. They're taking us above 30,000. And here's some tulip news for you. El Salvador, remember, they're buying Bitcoin like crazy, at least the guy who's leading the country right now. Well, he's down $36 million. Remember, this is a country that cannot afford to lose $36 million. So this is going to be a massive problem for that particular leader. And then we have SEC Gensler. The man remains in a coma, and here's the evidence. Gensler is warning that Americans are diverting savings to speculative crypto assets, and the market needs investor protection. Mr. Gensler, you've been saying the market needs this. We should look into that. This should happen. We're studying. We're looking into. We're assessing. How about taking actions? You already got the job. You're the boss of the SEC. Act like it. Take actions. Wake up from the coma. Anyhow, we're moving on to the conclusion of this video. What do we have on the economic calendar tomorrow? We have building permits and housing starts. We're seeing more weakness in the housing market via mortgage applications dropping down. But we're not seeing prices moving down because the supply versus demand imbalance in the housing market is extreme. So the only remedy would be crushing the demand significantly. That's not going to happen without massive unemployment. But for now, this data, building permits, housing starts, will give us a picture whether the supply is indeed arriving or not. With that, folks, this is all I got for you for now. Thank you for listening. Thank you for watching. I will talk to you again tomorrow.
This painting here, I bought it 10 years ago for $60,000. I could sell it today for $600. The illusion has become real, and the more real real it becomes, the more desperate they want it. Capitalism at its finest.